This is MeetSean, where we break down real life topics insurance, annuities, real estate, travel planning, and home ownership so you can make smarter moves. Subscribe so you don't miss the next episode.
If you close your eyes and picture driving in Florida, what do you see?
Oh, I know this one.
You probably picture those iconic coastal views, right?
Yeah.
The open highways,
Yeah.
maybe a sunset over the Gulf.
It looks like a perfect postcard of freedom.
It does.
But that idyllic postcard view, it gets replaced pretty quickly by the reality of I-95 congestion, tourist traffic, and an environment that just throws a lot of unpredictable things at you.
Right.
We're talking high accident rates. Florida often ranks among the highest in the country, and of course that completely unpredictable and sometimes catastrophic weather.
Exactly. The joy of the drive is offset by very real risks and, well, often is chaos.
Mm-hmm.
And that's why we're diving deep today into Florida auto insurance.
Mm-hmm.
Because it's not just a box you check on a form to satisfy a legal thing.
No, it's your core financial shield. It's what protects your health, your vehicle, and your bank account when things inevitably go wrong in the Sunshine State.
Our mission today is crucial then. We need to move past the simple mandate of what the state requires and really get into how comprehensive auto insurance works as a tool.
A protective tool in this, like you said, high-risk environment. We want you to walk away from this understanding the difference between just being legally compliant and being truly financially secure.
Okay, let's unpack this.
Right.
Specifically for the Florida driver, let's start at the foundation.
The baseline.
Yeah, the legal baseline. If you get a Florida license plate, what is the absolute floor you have to meet?
The legal foundation in Florida is the fact that it is a no-fault insurance state.
Okay.
And this is so crucial because it fundamentally changes how claims are handled right after a collision, especially with injuries.
I think I get the term no fault on paper, but can you walk us through what that means in practice, for someone standing at the roadside after a minor accident?
Yeah, of course. It means that if you are in an accident, your own insurance is the one responsible for covering your first medical expenses and related economic losses,
Regardless of who caused it.
regardless of who was ultimately at fault for the crash. The whole goal, at least initially, is to just streamline medical payments and get people taken care of without waiting for some official fault determination.
Okay, so within that no-fault framework, the law mandates two very specific types of coverage. What are they?
Right. So you have to carry two specific minimums. The first is personal injury protection.
PYP.
PIP, exactly. And that's the medical expense coverage we were just talking about. It's mandatory because of the no-fault rule, and the minimum you have to carry is typically $10,000.
$10,000.
Yes. The second mandatory coverage is property damage liability, or PDL.
And that's also $10,000.
Also requires at least $10,000 in coverage.
Okay, so just to be clear, PIP covers my own medical bills, and PDL covers damage I caused to someone else's property, the car, a mailbox, whatever, up to that $10,000 limit.
That's right.
That sounds like
Yeah.
maybe a decent starting point, but I have to imagine the money just evaporates.
And that's the critical point our sources really highlight. The legal floor, that $10,000 PIP limit, is designed to cover roughly 80% of your initial medical expenses.
Only 880
And 60% of lost wages. But if you're taken to a major trauma center or you need an ambulance and imaging,
That $10,000 is gone before you even know what's wrong. I mean, I've seen figures that the average ER visit for a moderate injury in the U.S. is well above that.
precisely. And what's fascinating here is the legal bare minimum is almost always financially insufficient.
It's a false sense of security.
It is. If you suffer a serious injury, something requiring surgery or rehab, that $10,000 in PIP is exhausted immediately.
Leaving you with what? Your health insurance?
Yeah.
Or just paying out of pocket?
Exactly. And worse, think about the PDL. If you only carry that minimum $10,000 and you rear end a brand new SUV,
Oh, yeah.
you could easily be personally on the hook for tens of thousands of dollars in repairs above that limit.
So the state has created a system that's just for, what, fast initial claim processing, but it leaves drivers just dangerously exposed to real financial ruin.
And that leads us right to the missing piece of the puzzle. If you only buy the minimums, you are only protecting yourself from minor medical bills and the minor property damage you cause. You are not protecting your assets at all.
That sets up our next question perfectly. If relying on those legal minimums is a recipe for disaster, what does real, comprehensive auto insurance protect you from? Here's where it gets really interesting. We have to talk about protecting our assets.
We do. When we talk about true protection, we have to address your liability to others. In a state as crowded as Florida, you absolutely need coverage that shields you when you are at fault for a serious accident.
Okay.
And that essential coverage is bodily injury liability, or BIL.
Now, wait a minute. You said Florida is a no-fault state. Doesn't that mean you can't be sued for injuries? Why is this BIL coverage so critical if it's technically optional?
That's a fantastic question, and it gets right to the complexity of the Florida system. The no-fault part only works up to a certain point.
A threshold.
Exactly, what's called the tort threshold. If the injury to the other person is determined to be serious or permanent, then that person can sue you personally.
For what exactly?
For pain and suffering, lost earning capacity, all their medical costs that go above their own PIP limits, everything.
Wow. So if I cause an accident that results in a severe life-altering injury, my $10,000 in PDL covers their car, maybe.
Right.
But without BIL, I am personally vulnerable to a massive lawsuit for their medical trauma.
Exactly. BIL is what steps in to pay for those severe medical costs and legal settlements you're responsible for. And just as critically, it pays for your legal defense if you are sued.
Okay.
In a state with this much traffic, skipping BIL is basically saying your house, your savings, your future wages, they're all on the table.
So medical costs, legal defense, third-party payouts, those are the huge liability pieces that mandatory insurance just ignores.
Completely ignored.
But in Florida, there's a whole other element that has nothing to do with another driver.
Yeah.
The unique geographic risks.
That's the other side of the protection coin, right? The non-collision damage. People hear auto insurance, they think fender benders.
Yeah.
But Florida demands a focus on protecting the vehicle itself from natural disaster. I mean, we're talking about a hurricane-prone climate, massive winds, flooding.
You know, I never considered that my basic mandatory coverage, PIP and PDL, would do absolutely nothing if a tree limb falls on my roof or my street floods. Is that really the case?
It's absolutely the case. PIP and PDL are for liability and your initial injuries. They do not cover physical damage to your own car.
Not at all.
No. That's where comprehensive coverage is essential. The sources are very clear on this. In Florida, comprehensive isn't a luxury, it's a necessary hedge against disaster.
So comprehensive is what protects the car from non-collision events.
Right. Theft, vandalism.
And critically, all the specific damages from tropical storms, hurricanes, floods, all the things that are so common here.
Yes. If a severe storm blows through and totals your car because of water damage, comprehensive is the part of the policy that responds.
That makes sense.
In fact, if you have a car loan, your lender almost certainly requires you to have it for that exact reason.
Right.
But even if you own your car outright, ignoring it means you are gambling the full value of your vehicle against hurricane season.
And this connects right back to the practical stuff we want you to take away.
Mm-hmm.
If you only have that minimum required coverage and a storm rolls through, you could be paying out of pocket for tens of thousands of dollars to replace or repair your car, just because you skimped on the storm coverage.
It's a proactive financial move. You know the risk is there.
It's a certainty.
It is. In a place where storm damage is basically guaranteed, you have to treat comprehensive coverage as mandatory for your own asset security, even if the state doesn't legally require it.
Understanding those dual risks, liability and weather, brings us to the next logical step.
Customization.
Right. You can't just buy a standard package off the shelf. Every driver has different assets, different cars, different habits. The policy has to be optimized to fit a personal risk profile.
And financial comfort level.
So, the ideal policy is personalized. What specific personal factors should our listener be thinking about when they're choosing coverage amounts, specifically for things like BIL and comprehensive?
The sources point to 3 key factors, and these are things you should be reviewing regularly, not just when you first buy the policy.
Okay, lay them out for us. How do they change the insurance equation?
First, your driving history. This is all about predictability, really. A clean driving history lowers your perceived risk.
Which means lower premiums.
Exactly. It translates directly to lower premiums, especially on liability coverages like BIL. Now, conversely, if you have claims or tickets, the insurer sees more risk and raises the price.
But that doesn't mean you need the coverage any less.
No, it means you probably need it more.
Okay, what's second?
Second is the vehicle type. And I assume this factors into both the premium cost and the limits you might need.
Of course.
Absolutely. The vehicle type determines the cost to repair it or replace it. Is it an older car you could replace with minimal financial pain?
Then maybe you can take a higher deductible on comprehensive.
Maybe. But if it's a brand new high-value vehicle, especially one with all the advanced sensors and expensive parts, You have to have robust collision and comprehensive limits to cover its full replacement costs.
A new car's bumper repair could be thousands of dollars now.
It really can.
Yeah.
$5,000 is not uncommon.
Wow. And the third factor, that seems to address how often you're actually on the road.
Exactly right. That's your lifestyle. It makes a huge difference whether you're commuting daily in heavy city traffic, say, on the I-4 corridor near Orlando.
Which is a nightmare.
It dramatically increases your chance of an accident, or are you retired and just sticking to quiet neighborhood roads?
So if I have a low mileage lifestyle, maybe I only drive a few thousand miles a year, I might get discounts.
You could qualify for specific discounts, lower overall premiums, which then allows you to afford higher liability limits without it costing a fortune.
And the opposite is also true.
Precisely. A driver commuting 50 miles a day in peak traffic needs significantly higher liability coverage because their exposure, their window for risk, is so much larger. The premium is higher, but the risk absolutely warrants it.
That is such a critical point. The goal isn't just to buy the most expensive insurance you can.
No.
It's achieving the right balance between affordability and real robust protection.
A balance that's tailored to your individual risks and your requirements.
And if that balance isn't right,
You end up dangerously exposed with a state-mandated policy that just doesn't cover your actual life in Florida.
so what does this all mean?
It means that if you're just relying on those statutory minimums, that basic PIP and PDL,
You're leaving yourself dangerously exposed, both legally and financially.
especially with that dual threat of dense traffic and Florida's unique environmental risks,
Right.
the necessity of moving beyond those no-fault requirements to include robust bodily injury liability and comprehensive protection, it just can't be overstated in this state,
You have to see insurance not as just compliance.
but as complete financial protection for your assets and your future earnings. It's a different mindset.
So we encourage you to evaluate your own situation right
Yeah.
now. Pull out your policy and review it against the risks we've been talking about.
Ask yourself, how does your vehicle type, that new SUV versus the 20-year-old sedan, change what you need for comprehensive coverage?
Does your daily commute put you at a higher risk that really demands higher BIL limits? Are you covered for that worst case scenario?
And here's the final provocative thought for you to consider.
Okay.
Since policies have to account for driving history, vehicle type, and lifestyle, how quickly would your current policy become either insufficient or even unnecessarily costly if your lifestyle were to dramatically change?
That's a great point.
Yeah.
So if you switch from a long urban commute to working from home,
Exactly. Or you move from driving 50 miles a day to just occasional rural drives. Or you pay off your house, suddenly increasing the personal assets you need to shield from a lawsuit.
this knowledge isn't static.
Not at all. Insurance evolves with your life, and your coverage must evolve right along with it.
That's it for today's MeetSean. If this helped, follow the show and share this episode with one person who needs it. See you next time.